Joined here by Mike Rodel, he's CEO of Hyprop, and we're just going to go through the numbers and just some of his thoughts around the retail space here in South Africa. Mike, thanks so much for joining us this morning. The revenue up, interim distribution per combined unit up 8.3%. Is this really a function of an improved economy?
I think we're seeing a gradual recovery in the retail economy, but obviously retail is more of a long-term bet in terms of the retail property management space. So it's a combination of the long-term leases that we have in place, the good quality of our shopping centres, and I suppose the outcome of some of the development work that we've undertaken in our portfolio over the last 3 years. I think we've extended Canal Walk. I think that we have extended the Glen in the south of Johannesburg. We added a hotel to Hyde Park. And so a combination of the new extensions, I think some of the tenant mix activity that's taking place in our shopping centres is all adding to the quality of the portfolio and driving that ongoing growth.
Now, one thing that has sort of negatively impacted your shopping centre income was the increased municipal rates as well as electricity during the period, and that wasn't fully recoverable from your tenants. In terms of how much you've had to adjust your rental rates, just take us through that.
Yes, I think obviously there's a combination in terms of two pressures. The one is the direct expenses that we would incur from the common area part of the property that we have to manage. That's the non-recoverable portion. The second component is obviously the additional pressure that it places on our retailers in that their gross property expense increases. So if municipal rates, municipal valuations, electricity increases are going up in the 20 to 30% a year, our escalations are running at 8%. In the end, the retailer is going to look at his gross property expense and he's going to want to see, I suppose, a reduction in his rental at some point upon renewal. So it does place pressure on our renewals as well as our ability to collect rent.
And so just on the following on from that, looking at the demand for retail space, what are you sort of forecasting for the second half?
I think that we will see the trends that we've seen in the first half of the year continuing. I think there's been renewed optimism. Our vacancy has reduced, I think, around about 15%. So we've seen space take up, and that's been on both the office space side, largely at Canal Walk in the Century City precinct, as well as a lot of new tenants taking space in our shopping centres. I think we've let 10,000 square metres of space to new tenants in the last 6 months, and hopefully that trend will continue for the rest of the year.
Another factor that I just would like to move on to is, of course, that redefine offer with your company recommending that the board reject the offer. Just take us through the thought process and why you've recommended that.
I think the primary reason that the Hyprop board has advised unit holders not to take up the offer from Redefine is primarily one of value. I think that the Redefine offer is at 50 Rand a unit. I think following a fair value assessment of Hyprop, the units were valued at between 54 and 58 Rand. That was including for the control premium that would be attributed to Redefine in terms of the stake that they would be taking up. So as a result of their offer at 50 Rand, I think being well below that range, the Hyprop board has recommended unit holders not take up the offer.
And of course your share price is now sitting at 52.51.
That's correct, yes.
And just looking at where you see growth in terms of your divisions of your company, just take us through that over the next sort of 12 months.
Our big focus at the moment is on the Rosebank node. I think that we acquired properties during the course of last year adjacent to the mall of Rosebank, and the objective there is to obviously increase our presence in the node. A lot of activity that's taking place in the precinct. You've got the Gautrain station opening next year, Standard Bank, who are building a large regional office, and that's going to see a lot of daily commuters coming into the node. So our initial focus is obviously on investing into the refurbishment and extension of the mall and bulking up in terms of adjacent space, in terms of we're looking at options from both an office space perspective and possibly some residential space. Beyond that, obviously we will continue looking at opportunities in the market. They are hard to come by, but we are certainly active in looking out for opportunities in respect of acquisitions.